Welcome to your Stock Sense Morning Brief. I'm Malik, and it's Tuesday, November 25th, 2025. Today, we're navigating a market that's showing both resilience and caution, with significant economic boosters on one hand and persistent domestic challenges on the other. Let's dive into what's moving the Pakistan Stock Exchange. Market summary. Yesterday, the KSE-100 index experienced a relatively minor dip, closing down by about 119 points or a modest 0.07% to settle at 161,984. This was a considerably milder decline compared to the previous trading session on November 21st, when the index had shed over 800 points. Looking at the broader market, we observed more declining scripts than advancers, with 247 stocks moving down against 191 moving up, and 39 remaining unchanged. Despite the slight index fall, trading activity remained robust, with a total volume of nearly 490 million shares changing hands, amounting to a traded value of almost 23.7 billion rupees. Sector highlights. Now, let's turn our attention to the sectors that had the most impact on the market yesterday. The automotive assembler sector exerted significant downward pressure, pulling the index lower. Similarly, oil and gas exploration companies also contributed negatively to the market's performance. On a more positive note, the fertilizer sector provided some much-needed upward momentum, helping to offset some of those losses. Technical analysis. From a technical standpoint, the KSE-100 presents a somewhat mixed picture. While many of the longer-term moving averages, like the 100-day and 200-day exponential and simple moving averages, are suggesting a buy signal, some of the shorter-term indicators, such as the 30-day simple moving average and the Hull moving average, are indicating potential selling pressure. The index is currently trading just below its classic pivot point of roughly 162,650. For investors watching key levels, immediate support can be found around 155,300, while a significant resistance level sits closer to 169,000. Corporate announcements. Moving on to corporate updates for today, November 25th, we have board meetings scheduled for the Pakistan Credit Rating Agency Limited and Diamond Industries Limited. Both meetings are set to consider matters other than financial results, so these are events to keep an eye on. Importantly for investors, there are no companies for which today is the last day of entitlement for any dividends, bonuses, or rights issues. Economic and market news. In macro developments, we've seen a blend of encouraging news and some persistent challenges. On the positive side, Pakistan is actively seeking to procure 100,000 tons of rice for Bangladesh, signaling a significant boost for our rice export revenues. Furthermore, the Chief Minister of Sindh has approved a substantial 25 billion rupee allocation for Karachi's reconstruction, which is excellent news for the construction sector and related industries. Perhaps most significantly, the U.S. Exim Bank has pledged a massive $1.25 billion loan for the Reko Diq project. This substantial foreign investment will undoubtedly bolster Pakistan's foreign exchange reserves and stimulate economic activity, especially in mining. However, it's not all smooth sailing. We're once again facing a recurring sugarcane crisis, with delayed crushing and price disputes impacting the sugar sector. We also saw the IMF raising concerns about the weakness of Pakistan's audit mechanisms, highlighting the ongoing need for improved governance. And locally, chicken prices have fallen significantly in Karachi due to border closures, which has a mixed impact. Tough for poultry producers, but potentially beneficial for consumers and other food businesses. Institutional flows. Turning to institutional flows, yesterday saw foreign institutions as net buyers, injecting about $750,000 into the market. This foreign buying was, however, almost perfectly counterbalanced by local institutional investors who were net sellers by a similar amount. Diving a bit deeper into the local landscape, we saw positive net buying from banks, bringing in nearly $4.8 million, and individuals, with about $3.4 million. On the other hand, local companies were notable net sellers, offloading over $4.1 million, alongside mutual funds, which sold about $4.3 million. Malik's take. My take on the current market dynamics, investors, is that we're navigating a period of interesting divergence. The KSE-100's relatively minor dip yesterday, coupled with sustained foreign buying, even if modest, suggests a resilient undercurrent. This resilience is likely buoyed by the substantial macro positives we've seen, the $1.25 billion Reko Diq loan and the 25 billion rupee Karachi infrastructure spending. These developments offer strong tailwinds for specific sectors, like mining, construction, and related industries, pointing towards potential sector-specific opportunities. However, the mixed technical signals and persistent domestic challenges, such as the recurring sugarcane crisis and the IMF's concerns over audit mechanisms, remind us that the market isn't without its hurdles. Investors should look beyond the daily fluctuations and consider how these larger economic developments might shape sector-specific opportunities and risks. It's crucial to be selective, focusing on companies poised to benefit from the large-scale investments, while exercising caution in sectors facing internal pressures. Informed, selective engagement remains key. That's all for your Stock Sense Morning Brief today. Thank you for tuning in. We'll be back tomorrow morning with another update. Until then, invest wisely and have a profitable day. This is Malik, signing off.